Hello friends, welcome to another video from Capstock's research team. Today we will be speaking about Infosys Buyback. A buyback, also known as share repurchase, is when a company buys back its own shares from existing shareholders. The main reason companies do buyback is to return excess cash to shareholders. This improves their earnings per share by reducing the total number of outstanding shares, and this also signals confidence in their business. Now coming to Infosys, the company has announced a buyback for 10 crore shares worth 18,000 crores. The buyback price is 1,800 rupees per share, which is at a premium compared to the current market price. The record date is set on 14th November. The buyback is done through the tender offer method. The shareholders will be notified through their registered email regarding their eligibility. Now let us talk about the cash tax implications. Once you accept the buyback, the entire amount of buyback is treated as dividend income and it is taxed as per your slab rate. So, from the investor's point of view, the cost of acquisition of these shares is treated as capital loss, and this can be offset against capital gains, if any, when you file your income tax return. Now, let me explain this with an example. If an investor bought 100 shares of Infosys for 1,400 rupees and is eligible for buyback of 30 shares, the value of shares he offered for buyback is treated as dividend income and taxed according to his tax slab. If the investor's tax slab rate is 20%, then the tax amount is 10,800 rupees. If his tax slab is 30%, then the tax amount is 16,200 rupees. If the total buyback amount is about 10,000 rupees, including dividend of rupees 45 per share, which is already given by the company in this current financial year, Infosys will deduct 10% TDS on behalf of shareholders. Now, speaking about the cost of acquisition of rupees 42,000 rupees. If held for less than a year, it is considered short-term capital loss. If you hold it for over a year, the loss is classified as long-term capital loss. So, we conclude that the buyback option is not attractive for investors having high tax brackets. For lower tax brackets, calculate your tax liability and decide accordingly. Please contact your financial consultant to know more about your personal tax implication before taking a final decision. Thank you. See you next time.